Hey everyone, it's Tom here, and on this video I want to go through what the ideal number of markets are. Now we've covered trading on multiple markets on videos before, but this week I was talking with a trader and we were talking about kind of like the right fit for them in terms of how many markets they could manage to trade and, how many markets their account would allow them to trade in terms of margin and all those factors that go into deciding what's right for them as an individual trader, because it's going to be different for every trader. So I'm going to try and touch on those points. I'm going to give you my advice in terms of, where I think most traders should focus on in terms of multiple markets, the benefits of trading multiple markets as well. And hopefully by the end of it, it'll give you an idea of whether you need to increase the number of markets you're trading or maybe, find a suitable level. So yeah, let's get started. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that'll map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So I want to start by giving you a real world example of one of our strategies. It's a strategy I trade on these three markets, so Euro Yen, Pound Dollar and Pound Yen. And I want to give you just an example of the results from this week across these three markets. So Pound Dollar, we had 3 wins and 2 losses. So an okay week. By the way, just to point out, I trade these at a 1.5R target, all three markets. And Euro Yen and Pound Yen both had 3 wins, 1 loss and 1 no trade day. So individually it was an okay week for each market, but combined, it was a really effective week. So we can see how we also spread the risk around on days when one of the markets was a losing trade, the other 2 were wins. So, we're diversifying there. And also obviously if we're finding a successful strategy, we're compounding it across multiple markets that we've proven work. And also one other key thing there is, if we're back testing, if we're checking to see if a strategy works on a market that maybe we already trade on another market, it's much easier to transfer an existing strategy to another market than it is to develop a new strategy for a second market, if that makes sense. And what I'm trying to show you here is kind of an example of how I would set up my charts in terms of trading multiple markets. So we'll come on to that now, and the kind of logistics of actually managing to trade multiple markets on your PC or your laptop or even your tablet, for example. Now, I can't show you the exact rules and basically what I put onto the chart to understand where my entry position is, where my stop loss, my profit is. All of this is fully mechanical, by the way. If you're unfamiliar how we trade WB trading, it's fully mechanical. So I'm using the same principle on each market. There might be very small tweaks, but at the end of the day, it's follow these steps to find the entry point. If it occurs, we get the entry. If it doesn't occur, we don't take the trade. So there's no decision making there, if that makes sense. So in terms of actually what I need to see, this might look a bit crowded, but it gives me enough information on each chart, each of these being a 5-minute time frame, to tell me when the trade becomes apparent, if I've got my levels set up where I need it, if I've got my indicators where I need them, and I know exactly what I'm looking for, obviously as a mechanical strategy, then it's actually quite easy to be able to pull the trigger. And also, if they occur at the same time, at least I can manage those trades a bit easier than having to flick between the markets. If we were looking at a situation like this, there's no doubt that it's easier to see at this level, and understand what's going on. The market obviously looks clearer, but we can't see what's happening, on Pound Yen or Pound Dollar in this situation. So having multiple markets on the screen at once, whether it's on one screen, whether it's across multiple screens, for example, I think that's the better way to go, as long as you can understand and identify the areas that you want to check on the chart to spot your entry point, to understand where your stop loss, your profit targets need to go, for example. Appreciate that, what I've got here is obviously this is a fairly sizable desktop screen that I've got here, and I use multiple screens, so, I'm in a good position there. If you're trying to trade on a small laptop or a tablet, it can be really difficult to have multiple markets on one screen at the same time. In terms of that, what I would always recommend is I say to traders, start with one market. So just pick one of these and trade it for, say, a few weeks just to get used to the strategy. Then introduce a second and just have it one market on the screen at each time. So for example, here we'll go and just have GBP USD and check between the two. See if you can manage that. See, logistically, can you manage that on a tablet or a laptop to flick between charts as we go? Just having one chart on the screen at any one time and seeing how easy it is to capture the entries on each market if they occur at close proximity. If you get an entry, say, 7:30 in the morning on pound dollar, and then your next entry you have to wait till 8:30, doing it on one screen's fine. But if you're getting the same entries, or entries at the same time, should I say, then it can be quite challenging to flick between. So just practice that. Quite a lot of traders often overlook that part, especially if they're trading on smaller screens, on tablets, where it's not as easy, just to get the mouse to flick between the charts really quickly or to see everything zoomed out nicely on a large desktop monitor. So that's certainly something to bear in mind, but hopefully you can see kind of the advantages of trading those multiple markets certainly outweigh the disadvantages of having to manage the logistics of that. Now, we've kind of covered the benefits so far. I want to point out, obviously, one of the risks here. And we've talked about this on previous videos, so appreciate if you've been a long time watcher, you're probably going to think, we've gone through this, Tom, but margin is something you always need to pay attention to. Now, this is particularly true for trades that we're going to place at similar times. So, for example, on this particular strategy, I may have all three trades open at the same time. So, therefore, I do have to be aware of what my margin is. Risking 1% on these trades means that I'm okay on margin requirements. The margins on these major currency pairs are pretty low on IG, you can see here. So it's not too bad. But on certain other markets, especially if you're trading maybe 4, 5, 6 markets at the same time, you might run into that problem, and it's worth bearing that in mind. It's something that traders often neglect when they backtest. Always something we should keep an eye on. As I said, if you manage your risk correctly, it's rare that you'll run into that kind of issue unless you're trading on really small markets where the margin requirements are pretty terrible, or a broker that's not really giving you very competitive rates on the margin. Just something to kind of point out that, it's not all great in terms of trading on these multiple markets. But as I said in the previous section, the advantages of diversifying across and, compounding your profit, it kind of outweighs that essentially, as long as you keep your risk management tight. So that is certainly something that it's worth pointing out because it is a potential downside. And I know some of you would mention it in the comments if I didn't mention it here. So I wanted to just get that in. With this being said, what is the right number of markets for each trader then? And everybody's different in terms of that. These are the pieces of the puzzle that we need to put together to understand for each individual what is best for you. So things like, what kind of hardware do you have in terms of managing all these trades? Could you trade 6, 7, 8 currency pairs at a time? Do you have a setup that's going to be able to manage that? And you're going to be able to assess each trade to the level of detail that it requires. And also keep a journal for it. Make sure you don't miss any trades, etc. Some traders will be able to keep an eye on multiple markets, especially if they're not necessarily looking for entries at the same time. And that's fine, maybe the limitation there is, your ability to concentrate on all those different markets, or your limitation is, the size of your computer screen, for example. That's also one thing to consider. As we've said, the margin requirement is another thing to consider, but really it comes down to what you can manage to focus on and what you feel comfortable with. Because quite a few traders, they could find a profitable strategy that would work on pound dollar, that may work on all of these major currency pairs to an extent, but the pressure of having that many trades open at one time, it's just too much for them. So, as I said, when we're looking at going from, say, just one chart on the screen at a time, to maybe 2, work your way up in terms of managing those trades and see, if I can manage 2 markets at the same time, think about it like juggling. Can I introduce a third ball? Can I introduce a third market into that? And then could I introduce the fourth, etc., and go along? And eventually you'll find a point where you're thinking, yep, that's enough, 3, plenty for me. That's okay, I can manage that, I'm getting enough profit out of that, and I don't want to diversify, I don't want to increase that anymore. And that's absolutely fine. That result is going to be different for every trader, but that's the way to find it. And plan your trades out like that and grow your kind of trading diversity by doing that process. Don't just jump in and start trying to trade 5 or 6 markets in one go. You will really struggle, especially if you're a new trader. So that's everything for today's topic, guys. I wanted to make this, try and keep it short and sweet and concise as possible, just to really hit those key points. And, it's a topic that I get asked quite regularly. And as I said, the important thing is it's not one size fits all for traders in this aspect. If you're finding it manageable on one market, you've tested rigorously, other markets to check if that same strategy is profitable, or maybe you even want to try and trade two strategies in one go simultaneously, start by just going from one market to two, for example. See how that you manage it across, say, a month or so. Then, do I even need to introduce a third one? And slowly build that up. Don't try and jump in at the deep end is what I'm saying, because it's going to be incredibly difficult for you to manage that. Even experienced traders, too many markets in one go, it just creates difficulties. So I'm hoping that's been useful. If you are only trading one market, it's giving you a bit of advice to have a look at maybe introducing a second in there. If you'd like to find out how we trade, by the way, this strategy, for example, that I'm not really showing off here, but I've gone through the basic details. You can book a call with one of our team in the description below. They'll be able to talk you through how it works, how other strategies work as well. If you've got any suggestions for topics that you'd like to see me cover in the future, drop those in the chat. Other than that though, thank you very much for watching. Hopefully that's been useful. And yeah, look forward to seeing you on the next video. Thanks.